Good morning, traders and investors. It is Monday, April 14th. Hopefully everyone had a great weekend and spring is in the air. Patio furniture is out. Man, it feels so good to have the snow gone and some warmth in the sun. Before we get jumping into the charts and looking at technical analysis, let me just remind everybody here, because I did spark some emotions last week, and I did not mean to. I am not an economist. I don't know politics. I don't follow the news very closely. What I do follow, as you guys know, is just price. Is money flowing here or there? Which asset? How do we protect our capital? That is my specialty. I made a couple comments about tariffs just from my own experience, because I used to own and run an importing business, a health product business, importing from China. And I was just sharing that tariffs obviously are going to increase the price in the United States for products coming in. So it's going to increase the overall cost of goods is my expectations. Obviously that is going to get passed on to the end user. Not saying tariffs are good or bad. I don't know what they are. There's experts out there I've been listening to that say it's going to create inflation. There's other ones that say tariffs don't create inflation. So again, it's not my specialty, and even the experts don't even seem to know. So don't think that I'm like pro or against tariffs. I don't know what I am. I just letting things go. I try and stay away from politics and all that stuff because it is very emotional, very frustrating, and nobody really knows how it is going to shake out in the end. The other thing I touched on was I made a comment about I thought American-made and North American-made, Canada, United States products were generally higher quality. And I spoke to another person who really kind of set me straight. He's like, well, would you rather own a domestic or an import vehicle in terms of reliability? I'm like, good point. And then they also shared the point that the iPhone, which is a pretty good product, is made in China. So obviously, I don't know really what I'm talking about. I live in my own bubble. When I see quality for stuff in China, from my perspective, it's usually I'm looking at just the odd parts and some tools, which are generally made of a stronger material, better quality steel, aluminum, all of that stuff. I'm not looking at the big picture. So my whole perspective of what I shared last week was a little bit off, because I don't think it is actually accurate when I step back and think about all of that stuff. All right, with that behind us, let's jump into the charts. I know you just stared at a blank screen more or less for a couple minutes there, but let's dive into the charts. Equities are trading higher this morning. We have lots of volatility. The markets have kind of come down and looks like they flushed out with that deep Friday close, gap open to the downside and flushed out, and now the market is trying to rally back. We're seeing stocks up 1% to 2% this morning, depending on the index, and we're probably going to see FOMO buying. We're probably going to see our FOMO indicators spike up, just like we have over here in the past, where it gets up to these levels, and then we see like a pullback in the market. And today we're going to have a gap up in the chart, and we'll see how this plays out. I'm expecting we're going to have news and stuff around tariffs that are going to continue to shake things up and change money flows. So we'll just have to see how this goes. Now, money is flowing into the NASDAQ the most, the large techs. People are piling in. It's up 2% this morning. And money is flowing out of the dollar. It's flowing out of gold into silver. Bonds are trading up. So it's a real mixed bag. People don't really know what to do. And we can tell through various assets in our analysis that things are haywire. There is no clear direction, not at least to the upside. And we're steering clear. You can see a big sell-off in bonds. Gold is obviously, and miners have had a very strong pop and rally. The more uncertainty there is, the more potential, the more gold will naturally want to move. And we have started to see miners really catch up and start to take off. It feels like they're actually getting to be a little bit of a crowded play just with the big gap and run. We might see a little bit of a pause or pullback just before maybe it wants to still go higher, but we're in that favorable condition for gold, and things related to gold should do fairly well, like gold miners. Silver miners on the flip side, well, actually, let's look at silver first. Silver has got a pretty bearish chart pattern, took the elevator down. It's kind of moving up in a bear flag pattern into a cluster of moving averages. It's also, if we draw a line across here, pretty significant pivot lows through this chart. If we just scroll back a little bit, you can see it's a pretty significant level on this chart. And it might want to flag out and build a little bull flag and then maybe take a push higher. But silver is kind of underperforming. And if we look at silver miners, which is like SILJ ETF, It has had a very strong rebound. Miners are outperforming and have come to life in the last couple of trading sessions. But overall, again, still really sideways. The moving averages are all crossed and trading sideways, and it's a pretty noisy chart. I prefer gold. Gold's still in a very strong uptrend, and if anything else, gold miners are kind of the safer play if you wanted to get into something that moves a little bit more. Let's take a look over at dividend stocks, SPYD. Obviously, dividend stocks have had a pretty strong move to the downside. We had this initial big sell-off. We had this rebound. You can see it came all the way down to the Fibonacci move and flushed down, and massive volume. Obviously, when we have massive volume and huge volatility, usually it means we're at a significant turning point. It feels like the sentiment shifted very dramatically from most people in all of this time really trying to pick a bottom in the market. And then suddenly right here, everybody says the markets are going lower and it's a bloodbath. And of course, most people panicked out. And now we're probably going to see this market bounce for several weeks or maybe even a couple of months. Now, this isn't just the dividend stocks. This will be the same with the SPY, with the QQQ. It's kind of all the same. We've seen the same measured move hit on the SPY, QQQ, and we're probably going to see some type of bounce and some big sideways move while it tries to figure out what it is going to do next. Let's take a look over at oil real quick. Oil, obviously, big breakdown below this $65 level that we talked about, and now it is trying to figure out again what it's going to do. I think overall, most assets, stocks, and oil and all that, I think they got oversold, and I think we're going to see them drift up over the next couple of weeks. I think they have kind of hit a short-term low. Now, this doesn't mean jump in and buy, because that is picking a bottom. We're going to let this market work itself out and bounce. The big play will be if it starts to roll over and starts a new downtrend, whether it's in oil or the stock indices on their own, then we'll be looking to get into a play that could potentially benefit from falling prices, or avoid it if nothing meets our criteria, and safely stay on the sidelines. Obviously, we've had massive volatility. Let's go take a look at the hot list. There are obviously some new triggers. They've got gold, silver miners, and consumer staples all generating a new trigger. Again, not the sexiest looking chart, the XLP. It's kind of sideways here and at the moving averages, and the trend is lower highs, lower lows. So just because it has a new trigger, this is a big misconception, doesn't mean there is a new, actually, it's a buy signal. The long-term trend is still up. You can see the long-term moving average, 150-day, kind of grinding its way up. But overall, the short-term trend is down, and money really isn't just flowing into this freely. It's not. People are still kind of defensive. So new triggers don't always mean a new entry point. It's just saying there is some momentum to the upside. But just because there's momentum doesn't mean it actually has a lot behind it. It's just an initial surge. If we go take a look at the long-term charts, we have obviously gone from these bearish environments, or we've had the COVID kind of washout. We had a bullish environment, then we had a bearish environment, and a bullish, and now we're back into a bearish environment where this market could bounce up, and then eventually we could go into a multi-month sell-off. Could be a lot bigger than that, or maybe the market stabilizes. We'll just have to see. But overall, the bull market, to me, based on the SP 500, is now over. Now it is going to stabilize, shake things up, and then I do believe we'll probably be going a lot lower throughout this year, and everything else is going to fall apart.